my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. Overall prices here have tracked sideways between late November 2023 until about 15 weeks ago. In mid-February saw the market break higher, but only as far as the June 2021 high at 18,610 and just under the then long moving average, currently 18,010, for a move back down. However, prices then started to find a base at the May 2021 high at 16,610 and around the combination of at the time of the short, medium and medium moving average, which was currently 18,765 and 17,880 respectively. It was back then that I started contemplating what sort of pattern the market was creating. Now, my initial thoughts were that this might be some sort of rounded bottom, which actually turned out to be true, but limited in its aspect. I next considered whether the action from the highs seen back in August last year might make this a possible descending scallop pattern, and I held on to this idea for a long while. The longer I held on to it, the greater the holes I saw in the argument. This led me to consider the descending scallop pattern morphing to become a possible bullish bump and run reversal pattern. 4 weeks ago I lodged this idea in both your own and my mind, but I should warn you that a primary topside target would be in the region of 31,200, well off the top of my daily chart. So it's something to bear in mind, stick in the diary if you will, for some date in the future, but also look closer at more nearby and I suppose realistic levels first. This leads me to the elephant in the room, the early February to late March bullish Andrews pitchfork highlighted in dark blue on my daily chart. This has been good at showing the bullish angle of attack of the market. However, late 3 weeks ago and then again 2 weeks ago, the market breached the upper time, currently at 21,715. I commentated on this 2 weeks ago thus, and I quote, "Now, this leaves us with 3 options. Firstly, will the market repair the breach and drop back within the bullish Andrews? At the moment, this looks unlikely. Secondly, will the prices track along the top of the broken upper time, as I've sometimes seen done on broken pitchforks? Right now, that is a possibility. Thirdly, will we have a new, more acute bullish Andrews pitchfork for the April-based action?" End of quote. Oh, sorry, still quoting. I'm not so sure on the negative side. The market has trampled all over the lower time, currently at 19,095, when it was first created. And there's the end of the quote. Well, since then, we have seen the market turn back down, capped by the May 2014 high at 21,610 and by a pipe top, and then dropped down to the dark blue highlighted middle time, currently at 20,405, where, along with the September 2022 low at 20,045, the market was supported for a few days before yet again pressing lower, such that prices as of today are testing the lower time again. Now, below this lower time, we next have support at the August 2019 base congestion, which is itself part of the April to May based bullish halfway hesitation between June 2021 high at 18,610 and the lesser Fibonacci line at 19,495. We also have the green highlighted short medium moving average, currently 18,765 in there as well. But first, let us see how the market deals with the dark blue lower time. LME 3-month zinc. In early April, when the market's break upwards was finally sustained, it came not without incident. Prices hesitated over middle to late April in a specific fashion with narrowing ranges that led me to draw in dark blue a small pennant pattern peaking at the end of April. We saw a breakout on the upside from this pennant and the market reached higher. However, the initial move up was somewhat lacking in enthusiasm, which also prompted me 4 weeks ago to draw a pair of trend lines in purple, currently 3080 to 3138, which developed into the ascending wedge pattern, and it's formed out of that pennant pattern. And prices moved up within the ascending wedge pattern until 2 weeks ago, when we saw the market punch up and out of this pattern, as well as take on the bright red coloured neckline, currently at 3149, of the September-December 2022 reverse head and shoulders pattern. This move higher achieved both the primary and the harder to reach secondary targets for the break above the pennant pattern. However, the market found it tough, pushing up through the bright red neckline. In the first case, making a 3-day bearish evening star pattern, which saw a limited though bearish move lower, before another attempt higher saw an even more limited move up. Yet together, they made a significant horn top, breaking down through the neckline last Friday and reaching the primary target at 29.36 yesterday, and now today moving on lower towards the secondary harder to reach target at 28.72. That's target X. This break lower also means that the attempted break higher last week and the week before were false breaks, and thus targets X2 and X3 in the 32.94 and 34.27 areas will be retired after this commentary. In their place, I have laid out target X1 at 27.07 as a new harder to reach secondary potential for the break lower from the ascending wedge pattern. The primary target has already been reached at 29.26. It was much as I said last week about these topside targets, and I quote, "I imagine that I might finesse them at some later stage." End of quote. I guess I just didn't expect finesse by so much. Anyway, on the downside, we have the congestion below from the April pennant pattern, mainly at the congestions at 28.10 and 28.25, plus the rising short medium moving average, currently 28.12. Beyond this is a fairly free area, dissected by the shallow old upper bull channel line, currently at 26.27, before we reach down to the rising medium moving average, currently at 26.52. LME 3-month tin. There were in the recent past multiple major patterns here acting on this daily chart. This year's action saw the market push back up from the stratified congestion bands below over all the moving averages and break significantly higher. The latter part of this break higher had been filled with hesitations, and these have helped create the 3 patterns formed over April, which is a bull flag in the first half of April, which reached its initial topside target, then a spike upwards in the middle of the month, followed by a possible hesitation in the second half of April. It looked very much like a bear flag. It was a slim bear flag, but it had potential, but it failed to fulfill this potential. That was not all, as together these 2 congestions plus the central spike altogether made up a very narrow head and shoulders top pattern with a fairly flat neckline, highlighted in bright red, formed over April, and that's currently at 31.510. The potential below for such a pattern also failed, and as I said 3 weeks ago, and I quote, "It looks like the slim head and shoulders pattern formed over April is not a topping action, but possibly a continuation pattern, and maybe even morphing into something else." End of quote. Well, that was what was happened with prices reached up as far as the new dark blue highlighted middle time, currently at 36.105, of the mid-March to late April bullish shift pitch that I drew last week. And when it was up there, it created a more rounded top with the one in April, such that we have an April to May double top, Adam and Eve type. This pattern has killed off the idea that the recent action might be a bullish halfway hesitation, with potential as high as target X at 38.500. I'll retire target X after today's commentary. We're also on the verge of killing off the dark blue highlighted bullish shift pitch hawk, with yesterday's break below and today's drop down to the 50% Fibonacci line, the March 2020 to March 2022 move at 31.845. But that was not all. We have still not completed the whole of the double top pattern, Adam and Eve type. We would need to see a confirmed break below the July 2023 high at 32.05 to start looking at potentials below. In the meantime, we have the nearby 50% Fibonacci line at 31.845, which is coincident right now with the old December 2023 to date upper bull channel line, currently at 31.890. And just below is the coincidence of the bright red neckline and the rising short medium moving average, currently at 31.455. So you can see there's still much that needs to be accomplished. I would only add the following. as a postscript, and is a comment I made last week right at the end of my commentary when discussing the other potential patterns that might occur from a failure of a British halfway hesitation. And I quote, "The alternative that we have a type of diamond top pattern, which seems unlikely though would not shut the door." End of quote. I'm still thinking about this, but I suspect the double top Adam and Eve type will trump any ideas I have. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.